Good morning, good afternoon, and good evening, friends. Let's continue with the um, chapter 1, unit 4, where we are discussing about the capital and revenue expenditures and receipts for CA Foundation students. This is the first chapter, and we are in unit 4. Last class, we saw about illustration 1, and now let's continue with illustration 2. And also, we will go through what is capital receipts and revenue receipts. Now, what we are saying is capital expenses and revenue expenses, but we will go through capital receipts and revenue receipts, right? So I'm in illustration 2, page number 4, chapter 1, unit 4, capital and revenue expenditure and receipts. Okay. Illustration 2, state with reasons whether the following are capital or revenue expenditure. Expenses incurred in connection with obtaining a license for starting the factory. 1. Expenses towards license costs, right? Or starting a factory. This license cost is the basic requirement before starting a factory, right? So this has to be capitalized. Without a license, the factory cannot start. So this should be capitalized, right? Capitalized expenditure. Second one, rupees 1,000 paid for removal of inventory to a new site. Inventory removal is part and parcel of the normal routines. A scrap inventory has to be changed to move to a different site, and because this is not going to bring in any sustainable revenue, right? So this is not going to bring in any sustainable revenue. This might be scrap inventory, which has to be moved or disposed. So this is revenue expenditure. Third one, rings and pistons of an engine were changed at a cost of rupees 5,000 to get fuel efficiency. See, to get a fuel efficiency, which is an long-lasting or an solution for inefficient fuel or reducing the expenses in future, we are investing, right? Rings and pistons. Best benefit of is going to move to multiple periods. Rings and pistons of an engine to get fuel efficiency. It should be capitalized. Yes. Then next one, 4. A factory shed was constructed at a cost of rupees 1 lakh. A sum of rupees 5,000 had been incurred in the construction of temporary huts for storing building material. Temporary huts for storing building materials. This is part and parcel of the construction of factory shed. So this amount, this is part and parcel of construction of factory shed. Without the safeguarding of building materials, the factory shed cannot be completed, right? Because the materials has to be kept safe. So temporary shed constructed for safeguarding of building materials or storing building materials to be capitalized. Right? So hope this is clear. Now let's get into what is a capital receipt and revenue receipt. Similar to capital expenses and revenue expenses, a capital receipt or revenue, let's say a revenue receipt is nothing but sale in the normal course of business or dividend received or interest income and any other income which is accrued during the normal running of business. So this is called revenue receipt. Then what is a capital receipt? Capital receipts are directly not related to the loss account, right? So, and capital receipt will not be credited to profit and loss account. Capital receipt not directly related to profit and loss account, right? And the amount received is not moved to profit and loss account. Such receipts are to be capitalized. Right? Example: sale of fixed asset. This is not a regular income that is going to have a normal course, which is happening the normal course of business, right? A sale of fixed assets and should be treated as a capital in nature. And let's get into some question and answer on this, like illustration, right? Okay, let's get into some illustration to explain this. I'm into illustration 3. Illustration 3, and Good Pictures Limited constructs a cinema house and incurs the following expenditure during the first year ending 31st March 2016. Okay, let me put this heading here. Capital and revenue receipts. Right. So far we have seen about capital and revenue expenditures. Now we are into capital and revenue receipts. And I'm into illustration 3. Let's get into details now. Good Pictures Limited constructs a cinema house and incurs the following expenditure during the first year ending 31st March 2016. Year ending is 2016 March. Let's take a note of it. These are all some of the important points what every student has to know. The dates and the month and the period of transaction are more important. Year ending 31st March 2016. Right? Second-hand furniture worth rupees 9,000 was purchased. Repainting of the furniture cost rupees 1,000. The furniture was installed by own workmen. Wages for this being rupees 200. Second-hand furniture, right? Purchase of second-hand furniture. Whether furniture is first-hand or second-hand, plus refurbishment cost and wages. Whether the furniture is first hand or second hand, the cost of furniture is an asset unless the company deals with furniture business. So in this case, furniture, it's not given here, it's a furniture business. So it's a cinema house. So furniture is the asset for cinema house. So purchase of second hand furniture, repainting or refurbishment cost, and workman wages paid for this is equal to 10,200. This should be capitalized because furniture is not for cinema hall. Main asset is furnitures. For the people coming to watch the cinemas, they have to sit, right. Furniture is the capital. Furniture is the important asset for them, so this should be capitalized. The other option, some people might have in view, like the wages is what is incurred by the own workman. Why can't this be taken into profit and loss account? This is also another thought, but most likely we have to give a comment like wages paid to the workman is incidental. This is not the normal wages. Okay, let me show here. Let me type here. Assumed that wages paid is not normal wages but additional wages paid for this purpose. So if we make this comment, then obviously it can be treated as capital, right? Second one, expenses in connection with obtaining license for running the cinema hall, which is 20,000 rupees. During the course of the year, the cinema company has fined rupees 1,000 for contravening rules. Renewal fees of rupees 2,000 for next year also paid. There are three items that is given here. In license fees, we saw in the earlier problem also, license fees capitalized. Right? And we saw the earlier example also, like any penalties or penalty, right? It's given as penalty or fine. This is not going to have a sustainable income, or it's not going to have lasting for multiple periods. It is for contravening the rules for the year, right? This should be charged to profit and loss account. So revenue expenditures. Then renewal fees for rupees 2,000 for next year also paid. Renewal fees, it's annual cost, right? Renewal fees, it's an annual running cost of the cinema hall. So this should be this, because it is paid for next year, it should be treated as prepaid expenditure. It should be treated as prepaid expenditure and taken to balance sheet for the current year, and next year moved from prepaid expenses to profit and loss account, because this cost relates to next financial year, not current financial year. Okay, to be treated as prepaid expenses. Then third one, fire insurance rupees 1,000 was paid on 1st October 2005, 15 for 1 year. Third one, fire insurance 3,000 rupees paid on 1st October for 1 year. Students has to understand, we are talking about year ending 31st March 2016. So any insurance paid on 1st October, it is paid from 1st October this year to 30th September next year. So 6 months cost to be treated as revenue expenditure, and 6 months cost to be taken to prepaid expenditure, because that is rupees 1,500 to current year P&L, and 1,500 to be taken to prepaid expenditure. Next one, fourth. Temporary huts were constructed costing rupees 1,200. They were necessary for the construction of the cinema. They were demolished when the cinema was ready. So this is, we have seen in 2 or 3 illustrations earlier. Temporary huts for rupees 1,200 capitalized and added to total construction costs. Hope the students have understood this and clear on this, what is capital receipts and what is revenue receipts, and the questions that we solved on illustration 2 and 3. Any doubts or clarifications, obviously you can send an email to babupriya@rediffmail.com, or you can put your comments on this video so that I'll come back to you immediately. Thank you, students, and have a great day.